All right, my friends, so the new month is officially upon us, and what better way to kick it off than with a dividend portfolio update? Today, we're getting all caught up to speed, and I'm gonna show you everything like my best and worst performing stocks for the month, all of my recent moves in the portfolio, and we'll discuss what my upcoming plans are here in May. But before we get to that, guys, I wanna hear from you. What's been going on in your portfolio this last month? Were you up? Were you down? Did you hit any cool milestones? I wanna hear all about it in the comments below. Anyway, getting into how my portfolio performed over here on my dividend portfolio tracking spreadsheet, which you can start using for free. There is a link to download this spreadsheet in the description of the video. But here, guys, we are just taking a look at my main taxable brokerage account on Charles Schwab, and we can see it's currently valued at $58,355, which is the first time this year, or maybe even in like 7 or 8 months, that we've seen a month-over-month decline in portfolio value. And to be more specific, just in the last month, this account dropped $2,746, which, breaking that down between share price returns and dividend income, means that I lost almost $3,000 of unrealized gains just in the last 30 days. That's a pretty big number, guys, but thank goodness dividend income did pull us back from that a little bit. And in the month of April, I brought in $223.17, with some of my largest payments coming from Blue Owl Capital Corporation right here, who paid me $43 for the month, and Altria Group, who paid me a whopping $55 in April. Now, if you want to see the full breakdown and see all of my dividend payments from this last month, and check out the video I have linked in the pinned comment. I go through it all there. Anyway, comparing my portfolio's performance against the three major indices here, the S&P, the Dow Jones, and the NASDAQ, I would say I was mostly in line with the indices here. I mean, I just barely underperformed the S&P by like 0.1%. I barely outperformed the Dow Jones by about the same amount, and the NASDAQ outperformed everybody and only saw about a 2.4% loss. And then looking at my year-to-date performance, this last month's return still puts me in the green, but not by too much. I'm still up about 2.7% here in 2024, which is beating the Dow Jones, so I guess that's good, but I'm still underperforming the S&P and the NASDAQ by quite a bit. They've more than doubled my returns so far for the year. And then with that, guys, zooming out once more, looking at these returns over the last 365 days, we're still up about 9%, but I'm underperforming everything here. The S&P is definitely crushing me this last year. The Dow's even beaten me by 4.5%, and then the NASDAQ is just absolutely obliterating. And then switching gears, comparing my returns to those of SCHD, the holy grail of dividend ETFs, SCHD actually beat me this last month by about 1.5% or so. But otherwise, guys, I'm still in the lead here. Year to date, I'm still outperforming SCHD, and I'm still outperforming them, although not by much at all in the last year. So overall, April was definitely not the best month for me. And as we'll see momentarily, I had quite a few stocks see some pretty steep share price declines. I actually had 2 that saw double-digit losses in the last month, which is wild. And then I had a few more that were pretty close to it. Now, before we take a look at my poor performing stocks, let's actually take a look at the ones that did well for me. I did have a few stocks that were in the green this last month, with Southern Company being my best performing stock in the month of April with a 5.25% gain in the last 30 days. And we can see they really started to climb here in the latter half of the month, with one of the catalysts being a nice beat on their first quarter earnings expectations, which was aided by a 12% year-over-year climb in electricity sales to data centers. So that's good to see. And along with this, Southern Company also announced a near 3% dividend raise, which I think would make it their 22nd or 23rd year of growing this thing. So still a couple years away from getting that aristocrat status, but all good stuff. At any rate, with these gains over the last month, it's going to leave Southern Company looking pretty good so far in 2024. Year to date, they've seen a 6.25% gain. Now, real quick, guys, before we move on to this next stock, I just want to say I goofed up. I thought Southern Company was my best performing stock in this last month, but actually my best performing stock was Main Street Capital Corporation, who just barely outperformed Southern Company by less than 1 percentage point. In the last month, Main Street climbed near 6% after announcing that they expect to beat their quarterly earnings estimates as well. According to this article, their net investment income per share should be coming in about 10 cents higher than analysts' expectations, which certainly will serve to benefit shareholders. And as it pertains to the dividend, Main Street CEO said this. He said, "Our estimated distributable net investment income for the first quarter of 2024 exceeded the monthly dividends paid to our shareholders by over 52.5%. That's very nice. And the total dividends paid to our shareholders by over 7.5%. From here, he added, we expect another meaningful supplemental dividend to be paid in the second quarter of 2024. That is music to our ears. And this additional dividend is a perfect complement to Main Street's already stellar performance here in 2024, where they're seeing a year-to-date gain of 16.16%. So both of those did pretty well for me this last month. And now, on the other hand, in terms of poor performing stocks, this is where it starts to get interesting. This one's probably no surprise, guys. In the last month, Starbucks is my worst performing position by far. They're down 17.3% in the last 30 days, and you can see they really dropped off a cliff right here after reporting an abysmal, just terrible earnings miss that completely blindsided investors. I was not expecting that. And to make matters worse, there was this deer in the headlights moment when the company's CEO went on CNBC and just got completely grilled by Jim Cramer, which definitely did not help inspire confidence and I think made the share price drop even more. As you guys know, Starbucks is one of my favorite companies and it's one of my biggest holdings. And so with that, I've been getting a lot of questions about what I think about all this stuff and what I'm doing. And let me just say, it was a tough quarter and the next few quarters might be bumpy as well. We'll see what happens. But in the meantime, I am taking this opportunity to average down and lower my average cost per share. I'm dollar cost averaging into Starbucks right now, which I'll circle back to in just a moment. But first, I want to tell you about the second stock in my portfolio that saw a double-digit drop in the last month. This one is AbbVie, who's down about 10.5% in the last 30 days, which is interesting because they actually reported a beat on both the top and bottom line and even raised their guidance for the year. But still, concerns about falling Humira sales outweighed everything else and sent the share price heading south. And these two were far from being the only ones where that was the case. I had quite a handful of other companies see some pretty steep declines this last month, like Snap-on here, who was down about 9.5% in the last month, along with Lowe's, who was down about 8%, and then Williams-Sonoma, who was not too far behind that, down 7.2%, and then J&J and EPD both down between 4.5% and 5%. Visa was down a bit, KRC was down a bit, and WP Carey was just slightly down. So a lot of red this last month. Now getting into all of my buys for the month, guys. In the main account, I only added to 3 different stocks, with the first one here being Johnson & Johnson. I picked up one tranche of J&J, picked up 0.9 shares at an average cost of $145.91, and I'd like to continue averaging down in this one, but we'll see what happens. I'm kind of directing all of my attention to this next stock here, which is Starbucks. In the month of April, I added 2.7 shares at an average cost of $86.14. Like I said earlier, I'm averaging down on Starbucks, and as you can see over here on my portfolio tracking spreadsheet, I've got quite a good opportunity to do so. My average cost per share is not bad. It's just under $90, but this is still so far above the current share price of about $75. So that's quite a big spread there. And after this drop, guys, this actually leaves Starbucks as the worst performer in my portfolio right now. Just in terms of share price, it's down 16.7%, and it's down about 12.7% looking at the total return. Anyway, back to the purchases, guys. I also added a little bit to Visa, certainly not as much as I have in previous months, but I've been distracted with these other 2 stocks that we've already mentioned. But still, in the month of April, I added about 0.8 shares of Visa at an average cost of $274.36. And those 3 were it for the main account. And then jumping over to the Roth IRA, you already know I bought some SCHD. I actually added quite a bit to my SCHD position. I picked up 5.1 shares in April at an average cost of $78.55, which is going to leave me less than 30 shares away from my goal of hitting 100 shares by the end of the year. So I'm at 70.8 shares. I definitely think I can get there. We'll see how the rest of the year goes, but I'm feeling pretty good about it. And then last but not least, throughout the month of April, I added about half a share to my VU position, picked up 0.53 shares at an average cost of $471.28. And those were all the purchases. And with that, now moving on and taking a closer look into my Roth IRA over here on M1 Finance. We've got the margarita money all pulled up. We can see this bad boy is currently sitting at $9,105, which is quite a bit higher than this time last month. This is still, at least as far as we've seen in the videos, this is still an all-time high for the Roth IRA, so we'll take it. And its current value is not too far off from its real all-time high of almost $9,200. So I'm pretty happy with where it's sitting. But in the last month, according to this, we did see a money-weighted loss of 2.87%. So we're down a little bit there, but still, if we look at the year-to-date performance, it's looking pretty good. We're still up 3.5%. And if we zoom out looking at the all-time performance, I'm still up 21.5%. So looking good there. And now, guys, if we take my main taxable brokerage account, which is valued at $57,861 and is generating almost $2,400 of annual dividend income, and add that to this $9,100 Roth IRA that is generating almost $240 of income, that's going to bring my total combined portfolio value to $66,966, almost $67,000. And in total, I'm generating $2,630 of annual dividend income. At the end of last month, it was $2,591. So a little step up from there. And looking at the year-to-date income gain so far, it looks like here in 2024, just these first 4 months, the first 33% of the year out of the way, I've added almost $160 to my projected annual income, which still has me on track to hit $3,000 of projected annual dividend income by the end of the year. That's kind of my main goal this year. If by the end of 2024, I can hit $3,000 of projected annual income, I will be super stoked. So we'll see what happens, but for now, we're still going strong. Now, as far as my watch list goes, guys, I call it my due diligence list. These are the stocks that I still want to look into, thinking about adding to the portfolio. No changes in the last month. I've got to say, though, I'm kind of thinking Yum Brands is not going to make it in the portfolio. I think it's probably a fine company, but as far as restaurant exposure goes, I think I've got enough of that going on with Starbucks, which if I end up removing this, will just leave Rollins and Zoetis, both of which I think are really rock solid companies. And I should have started a position in Zoetis, guys. Out of the three here, or really out of these two, this is the one I've got my sights set on the most right now. But as we can see, they had a really solid rally in the last week. Just in the last 5 days, they were up 11%. So like I said, I should have just started a small position, just started building a little something out when I first started talking about it. But there's still a chance, you know, they're still down 15.25% year to date. So it's still looking pretty good. And speaking of looking pretty good, guys, check out this next video right over here where I'm telling you about 3 deeply discounted dividend stocks, all of which look like great pickups right now in the month of May. So click right over here to check them out, and I'll see you in the next one.